Hello, everyone. Right, let's see if there's audience, attendees. Hi, we have Asnan here. 4 people coming in. Hello, everyone. Welcome, welcome. Let's give it another minute for everyone to settle in. Thank you so much for joining our session today. How's everyone doing? Do comment on the chat box how you're feeling today. It's Friday, and I'm definitely very happy. Hi. Let's give it another 30 seconds for more people to come in before I start the session. Hi, Bruno. How's it going? Hi, if you're currently tuning this on Facebook, we have pasted the link to this Zoom webinar. Feel free to join us on Zoom, but if you choose to stay on Facebook, it's also fine. Hi, Bruno. Let's see who's here. Hi, Eric. Hi, I know. Oh, nice. Jake. Sue, Milan. Hi, let's give it another 15 more seconds for more people to come in before I start this session. All right, let's see. Nice. All right. Hello, everyone. Welcome to our new webinar series known as Investing 101, where we talk about everything and anything about investing. My name is Kelly, and I will be your host for today. If this is your first time tuning into our session, pitchIN is Malaysia's leading equity crowdfunding platform, also a registered market operator, or known as RMO, with the Securities Commission of Malaysia. pitchIN Equity has successfully helped startups collectively raise more than 100 million ringgit to date, the most among all ECF platforms in Malaysia. Equity crowdfunding gives investors the opportunity to invest in fast-growing companies and have high potential for growth, where the public, such as retail investor, can invest alongside angel and sophisticated investor. For more information and to find out how you can invest, head over to www.equity.pitchin.my. At pitchIN, we regularly run these webinars for both investors and business who are looking to raise funds. If this is something of your interest, don't forget to like our Facebook page at www.facebook.com/pitchin.my so that we can keep you regularly updated on all our program. Hi. Okay, let's see. We have more people coming in. If you're currently tuning in on Zoom, you can use the chat button to chat with the audience, and please use the Q&A button located at the bottom right of the Zoom. If you're currently tuning in via Facebook and would like to join us on Zoom, we have pasted the Zoom link of the webinar in the comments section. However, if you choose to stay on Facebook, you can also paste all of the questions that you have at the comment section, and we will answer all of them accordingly. Well, for a quick recap, in our last session, we invited Mr. Locke from MBAN, also known as Malaysia Business Angel Network, to share with us what he looks out for as an angel investor. If you missed that session or would like to rewatch that session, it is available on our Facebook page at www.facebook.com/pitchin.my under the video section. Well, for today's session, it will be slightly different. It will be a 20-minute fireside chat and a 10-minute Q&A. The whole session will not take more than 45 minutes. So is everyone ready? Is everyone ready for this session? If you're ready, please comment you're ready at the chat box. Ready, nice, well done. I love the enthusiasm. Nice, hi everyone, all right. So our guest speaker today has a very impressive and interesting background. Our guest speaker today is Muhammad Sharil Tarmizi. Sharil Tarmizi is presently a consultant focused on corporate and regulatory advisory work. He started his career as a lawyer, specializing in construction law before moving to technology, media, and telecommunication, also known as TMT, and subsequently became a corporate advisor involved in several corporate turnaround exercises. Across his 27-year career, he has spent 16 years in the legal and corporate sector and 11 years in the public sector. He started his career in Malaysia's foremost construction law firm, focusing on commercial and construction work. He later joined one of Malaysia's largest law firm and was involved in advising several privatization exercises before becoming a technology and corporate lawyer, where he got involved in the early days of multimedia super corridor, also known as MSC in Malaysia in the late 1990s. He then became a regulator in the internet, telecoms, online media, as well as the postal and express delivery industry. He had two tours of duty serving Malaysia's telecoms, media, and postal and digital signature regulator, the Malaysian Communication and Multimedia Commissions, also known as MCMC, where he was the pioneer team during the formation years of MCMC from the year 2000 to 2006. After the cessation of Telecom Department of Malaysia, also known as Jabatan Telekom Malaysia, and the Broadcast Licensing Division, Ministry of Information, Bahagian Perlesenan Penyiaran, Kementerian Penerangan Malaysia. After 6 years with the MCMC, he joined a boutique investment advisory firm in KL, where he was involved in several corporate restructuring exercises. In late 2009, he was invited to return to MCMC to become its chief operating officer before later being appointed as its chairman and chief executive in late 2011. During his tenure in public service, amongst others, he led the development of policies for the converged communications and multimedia industry in Malaysia, including the deployment of 3G mobile services and the development framework of digital terrestrial television in Malaysia. On his second tour, led the development of the National Postal Strategy 2010 and 2014, which saw the transformation and progressive liberalization of the postal and courier industry via the promulgation of the Postal Services Act in 2012. In May 2014, he coordinated the organization of the world's first high-level expert dialogues on real-time monitoring of flight data between the International Civil Aviation Organization, also known as ICAO, and the International Telecommunications Union, also known as ITU, soon after the conclusion of the ITU's World Telecommunications Development Conference in 2014. He also spent some time in the global internet space, where he was involved in multi-stakeholder organization called ICANN, which was managing the global internet domain name system, and volunteered his time for capacity building with various international agencies linked to the United Nations, such as the International Telecommunications Union, ITU, and the Asia Pacific Telecommunity, APT. His years in both the private and public sectors provided him with vast industry knowledge in the areas of broadband, internet, e-commerce, cybersecurity, telecommunications, ICT products and services, as well as the postal and courier services / express delivery and digital signature services. He sits on the board of several public listed companies in Malaysia and several other private companies spanning across various industries. He is a licensed amateur radio operator and is a passionate supporter of technology startups. Sharil graduated with an LLB honor from University College of Wales, Aberystwyth in 1992, and in 1993 became a barrister of Gray's Inn, London. He was also called to the Malaysian bar in 1994 and was an advocate and solicitor of the High Court of Malaya. In 2017, his alma mater, Aberystwyth University, conferred him an honorary fellowship. He's also on the advisory board of the United Nations University Institute in Macau. Wow, that is a handful and that is a lot of experience. Ladies and gentlemen, I would like to invite Dato Sharil. Hi, Dato. How's it going?
Thank you, Kelly.
That's a long intro, and I'm so excited to have you here.
Yeah,
and I would like to thank you for taking some time off to share with our audience some of your investing journey.
Yeah, well, I didn't expect you to read everything.
I felt like if I didn't read it all, it doesn't justify your experience. I felt like I had to share everything to everyone.
Well, yeah, thank you. Hi, everyone. My name is Sharil, and thank you, Kelly, for the long introduction. And also thank you, PitchIN, for having me as a guest for the session today. I think I noticed some of you, and I recognize some names. I won't embarrass you by saying that I know you, because I won't call you out. But to the quick response to the question that you said, you asked just now, when did I start investing, and what was the first thing I did, right?
No, I have not asked yet.
Oh, you have?
Sorry, I have not. All right, let's start. All right, Dato. Oh, sorry, Sharil. At what age did you start investing?
Well, before I go there, maybe I just wanted to say that I have been always a curious type of person, so I'm constantly wanting to learn new things. I started looking at investing before it became popular, which was like maybe about 27 years ago. Back then it was called friends getting together and putting some money into something we believed in.
Mm.
Now it's become a little bit more structured. It's still become, even sexy to say that, oh, you're an investor and you're involved here and there. So I started a couple of years fresh out of college after working, and we were looking at putting in some money together to develop a new air filtration system.
Mhm.
Because my kid at the time, my eldest, had respiratory problems. So doctors said that he needed a clean air environment. And back then, 25 years ago, there was really not much in the market apart from your hospital air filter system. So we were looking at developing. So somebody came up with a product design, somebody came up with a technology using UVC, ultraviolet C, and we thought, hey, this is a great idea. Surely if I needed it, somebody else will need it, and therefore we all put in some money. Let's just say a couple of years later, the business ran out of money and we all lost our money.
Oh, were you the one executing, or were you just
No,
an angel
no,
investor?
No, I wasn't. I was an investor, but that's probably my first lesson in investing. Don't go in unless you're very sure that you have confidence in the execution team. So I went along with friends. I didn't know any better. I was like 26, 27. Idea was a great idea, but great ideas, if execution was not done properly or is not followed through, doesn't mean anything.
Mm. And how much did you invest in the business?
Yeah, too much money. Back then, I think you didn't have the opportunities that you have today. So, for example, today through equity crowdfunding, you can invest as little as 500 ringgit, for example, depending on what is on offer. But back then, you were actually a shareholder, a proper shareholder. Where I'm trying to avoid how much, but okay, it was more than 10,000 ringgit.
Okay.
And
And this was in the mid-90s, right? There was a lot of money.
Mid-90s. There was a lot of money. But back then it was like 10,000 ringgit and you had like 5%, 10% share of the company. And you thought, oh, okay. Because there's no concept of fractional ownership like what you have today. So for example, if you have today with the equity crowdfunding platform like pitchIN is, you could own 1 share, you could own 10 shares, you could own 50 shares or 100 shares. So the thing has evolved over the years. But I lost money on my first venture.
What was the biggest lesson you learned from that investment?
Well, I think one of the things that I learned, and again, this is just sharing, everyone will have their own experience, I think, and journey. Enthusiasm alone doesn't get you it gets you in, it gets you involved, but you need more than enthusiasm. You need to do your research. You need to understand your market. You need to understand the headwinds that you might face in the business. It's like any other business, but because you're an investor, you really need to also pick the right execution team, unless you yourself are part of the executions team. So it is one of those lessons that nobody taught me. I learned it the hard way because I put a substantial amount of money at the time, but I was not able to influence the direction or the focus of the company because I was only a 10% shareholder. And there were others who had a different view. And one problem when you have a multiple layers of shareholders or many shareholders, you will have then different directions. So my first lesson was, if you're going to get into investing, number one, you should know your market, which I thought I did. You should know the product, which I thought I did. But what I didn't realize, or what I didn't know at the time, was the execution team and how they, how the execution capability would be. And that was a big lesson for me.
So would you say that the team itself is far more important than the idea?
I would say the idea and the team are equally important. So I wouldn't, a great idea without a strong team to execute doesn't get you very far. A strong team with no idea is also no good because you could have an idea that is, because then there is no focus. There is no unitary purpose for the team to focus on. And that's why the idea is important, so that the team can say, right, we all have this goal. We all may have slightly different versions of what we think the goal is, but you know the general direction of what you need to do. And that is super, super, super important, because today, especially, you can get distracted by a lot of things. People, again, the popular word that startups use today is pivoting. Yes, you can pivot, and it's good to pivot if you know the time is right to pivot. Very often what happens is that a lot of these startups, and I meet a lot of startup founders who say, oh, we're pivoting. And I said, where were you pivoting from? Why are you pivoting? Do you know why you're pivoting? That's when they go, it's just because they hit a roadblock. Hitting a roadblock doesn't mean you pivot.
Correct.
Hitting a roadblock means you go and find out and figure out how come you have hit the roadblock and what is it that you can do to get around the roadblock, but not pivot. So there's so many other things. And again, I realize we're talking about investing, we're not talking about mentoring the startups, because part of what I do, I actually mentor startups as well. So anyway.
So do you invest in older startups that you mentor?
Yes. Well, yes and no. There's a few. I started my investing journey, as I said, the first one and the first failure was 25, 27 years ago, that air filtration thing. I guess we were too early. Air filters was not the thing 25 years ago. I guess if I had done it 3 years ago and COVID came in 2020, I would have been quite well off, because everybody's more conscious about health issues. Everybody's more conscious about indoor air quality and things like that. But when we were doing that in the late 90s, everyone looked at us and said, why do you even need a air filter? For what? Today, cars have HEPA filters, the equivalent of N95 in the car.
Wow.
So I still follow, because I want to learn from my failure, my first failure, and I can see that. I said, maybe we were 15 years later, we probably would have, but we were just too early. Anyway, so that's the first part. Coming back to your question about which companies or what have I invested in, some companies I do invest in, but they would have to be in line with my investment philosophy or investment ethos.
Okay.
And I don't profess to know everything about everything, so it would have to be in areas that I am particularly inclined in. I can say that. But yeah, having said that, so some companies I mentor and advise, and I just do it for free. Some of them I actually involve myself, and I involve by way of taking a small equity stake. And when I mean small, it's really small. It's not even 1% or 2%. Many of them I do through pitchIN as an equity crowdfunding platform, because I find that pitchIN has helped me go through a lot of the basic issues, like the financials, the corporate governance, the those kind of things, and then it just makes life a lot easier for me.
So speaking of your investment philosophy earlier, would you mind sharing what your philosophy is?
Yeah, sure. I need to compose. I think one of the things I always ask myself, if I'm looking at a particular investment or looking at a particular company or a particular startup with an idea, says, what problem are you solving? What is it that you think you're solving? So as an investor, that's the first question I ask. Number two, how do you think you're going to go about solving the problem? So that's the second philosophy. And the third is, do you have the requisite industry knowledge to address or that problem? And I apply that philosophy across the various sectors I look at. So I typically focus on about 4 verticals: deep tech, health tech, e-commerce, trade, and also any applications that can innovate and change the status quo. So these are the 4 verticals that I look at.
Okay, so when it comes to innovative startup, like you mentioned earlier, you invested in a air filter company, but it was way too advanced back then for it was too advanced for its time, right? So how do you balance between that innovation that it's too early, or how do you sorry, let me just rephrase that. How do you invest in a company knowing that it will be something that the future might need versus what is on trend right now? Because you want to invest early, right, into innovation startup, big data, or people are very big into driverless car. So how do you at what point do you draw the line? At which stage do you start investing?
Well, I'll try and answer that in 2 parts. One is, first, as an individual, you have to ask yourself, right, what level of investment are you comfortable with? I'm a very, very early stage investor. When I say early, it's super stage. It's almost just after ideas, just before MVP or minimum viable product. Some investors are a bit later stage. I don't have that kind of money. That kind of money usually is reserved for VCs and a more structured investment groupings or angel clubs. So I look at more early stage, but that also means that there's a lot more risk because you're just moving from ideation to maybe a framework, an execution modality, but everything's on paper. Now, on the other half of what you asked, that's a bit more tricky and that stems from the fact that how well do you know the industry that you think you want to invest in? For example, today people talk about green tech. People talk about ESG, environmental governance, and climate change and climate concerns. I had friends who started out and invested and set up and invested and actually even listed a company on the Malaysian Stock Exchange providing biodegradable food containers. But he was 10 years ahead of his time. And that company already, unfortunately, is no longer listed. It's been delisted. And that's simply because he was too far ahead. Now, when do you know whether you are about the right time? I would say an ideal spot to be in is to be just ahead of it, maybe 2 years before or 3 years before, but not too far ahead, because when you're too early in the game, one of 2 things can happen. If you've got enough money as a startup or as a company to sustain, and it takes, say, 7 years for industry transformation to happen, then that's great. You're on top. And that's why you see the companies in the US, for example, they tend to survive longer because investors keep pouring in money, and then there are different stages of investors. Here in this region, in the last couple of years, for example, things are improving. There's more access to funding for startups and more access to opportunities for investors like me. So there's that cycle starting. But before this, anyone with a great idea, even with a good execution team, if they're a year too early or 2 years too early, how much money can you burn in 12 months or 24 months? At some point, you run out of steam, you run out of cash. And that is always the risk that the investor faces and the company. So as an investor, I'll share with you a story. One of the companies I actually invested in, it's a company based in Switzerland. So it's outside Malaysia. It's in deep tech. They do very high resolution imaging, which then can be transferred to AutoCAD designs. So what you do is you fly a drone over a city, you map the entire city, and you can digitize the entire city without even having to put down a survey map. So I thought, great. Does it have any application in this part of the world? No. But in Switzerland, in Europe, for example, there's a lot of rules, laws around urban planning, urban design, redevelopment. So that company has got a very good future in that part of the world. Why I'm sharing this is because I actually knew one of the co-founders, and he approached me and he said, would you like to invest in our company? We have this idea. And there were three of them, three co-founders. And I looked at the idea and I said, interesting idea. What else have you got? He says, well, it's an idea at this point in time. So we're inviting friends and families and a few close friends. And would you like to join? And I said, look, tell you what, young man, if you're still around after 12 months, give me a call. So great idea. They were smart kids. They came from the best university in Europe. 12 months, exactly 12 months, he calls me up and he says, Sharil, actually he's sort of my nephew. So he said, uncle, it's 12 months. I said, oh yeah, what about? And he says, you asked us to call you if we're still around after 12 months. And I was helping them every time, they came to me asking for advice and all that. And then he came up, so I said, yeah, so what's happened to the company? He says, oh, we've actually raised our Series A. We're going to close our Series A. And I was like, what? And he said, yeah. So, we asked you to invest, but you didn't want at the time. But, my co-founders and I thought, you've been so kind to us. So we set aside some shares for you. But now it's at the Series A price, which had gone 4x compared to when I was first offered 12 months before. So you learn.
Yeah.
But so that company is now rolling quite well. And I gave them a 50-50 chance that they would do well, but I didn't expect them to accelerate that fast. So now that's also a second lesson for me. It's hard to guess, but I think knowing the market better, had I known the European market better, then perhaps I would have put in the money. Of course, my wife then said to me, there you go, you see, told you to invest in the boy, why didn't you invest in the boy? And my simple response was, I see 5, 6, 7 of these kind of proposals every month. And 80% of them don't even start from the idea stage. So, you make mistakes.
Yeah.
Anyway.
So you mentioned that you mostly invest in young startups, ideation or moving to framework. At what point do you exit the company? When they raise Series A, or do you hold on until the very end?
I haven't exited a single one yet, so I cannot say I am succeeded. And again, just to share with all those out there who are listening in, I'm one of those. I invest not so much for the money, if you like, because I haven't made anything yet. But I'm happy to say that none of the startups have failed yet, so we're still surviving. And some of them are cash flow positive. So I'm learning with them as I go along. And one of the things that I do is that I actually take a bit more of an active role by contributing my experience and my knowledge to the startup founders, but only if they want it. If they don't want it, I'm quite happy to be a passive investor. But I think, I think 1 or 2 of the startups are now approaching a series, reaching Series A, and one is actually going to B. I've held on because in monetary terms, it's not much, but I just like to go on the journey to learn what it's like. But one of them, if we do get to being able to list on one of the bourses, then maybe I might exit at that point in time.
So you invest not for money, but just passion, pure passion for your interest in startup. Sounds like it.
Yeah, that's going to sound very weird, but no, I do want to make money. Money is important. Okay. But yeah, I also go in on the understanding that, that's not the be all end all. I actually learn a lot by working with the startup founders and the co-founders. I also learn a lot by seeing and comparing one startup to the other. So I have more than half a dozen that I'm actively involved in across the world. There's 2 in California, there's 1 in Europe, 1 in UK, and about 5 in Malaysia. So about fairly involved with about half of them. And I learn and then I share experiences between, say, what the US guys are doing with the European guys. I mean, without divulging any confidential stuff, of course. Oh, there are lots of questions coming.
Yeah. Do you want to answer
No,
some of them
it's
now?
up to you. You control. You
All
control.
right. Yeah. So before that, right? You mentioned so all this. You mentioned that you currently invested in about 10 over startups, right?
Yeah.
So when did you start investing in them? Like, what was the timeline? Was it 10 years ago, 5 years ago?
I think I got more seriously involved in startups maybe about 5 to 7 years ago, slightly more than 5, maybe about 7 years ago, and that's largely because I have worked as a consultant. I've worked in the public sector. My main job or business is helping companies turn around from their corporate failures, actually. So that's what I do for a living. Or, and sometimes the corporate failure happens because these bigger companies don't see what's coming. They don't see the future trend. They don't see how all of a sudden new technology or new ways of doing things have just taken over their traditional business, which they've been doing for the last 20, 30 years. And then they call consultants like me to come and say, oh, what do we do now? How do we turn around? I said, you didn't see this young team come up 5 years ago? No, we didn't see it at all. So in a way, I'm fortunate because I then get to learn from the lessons of the failure of the bigger companies and how the new guys have attacked that market. And in the last 7 years, it's become more active. So day job, I do corporate restructuring and help people restructure their companies. And in the evenings, in the afternoons, I then look out for new startups who are disrupting the market or doing things differently. So yeah, and so in the last 7 years, I think I've been more active. Although along the way when I was working as a lawyer and all that, there were things that came along my way, and either due to conflict or whatever, I didn't invest, but I just followed through. And there's some that actually have done very, very well, and I regret not pursuing. But there's one, for example, a supercapacitor battery company in Estonia. The founder reached out to me about 2 years ago and said, would you like to come in? And I said, nah, I don't understand the technology, blah, blah, blah. Now he's done a Series C and he's worth about $250 million US. I'm like, so yeah, so sometimes you get opportunities like that, but you also, some people are more aggressive. They will go into sectors that they don't. I usually don't. I'm a bit more careful because money is hard to come by. And by the way, for anyone who's thinking about coming in to invest, you always have to take in mind the view that you might lose all of your investment. Again, I'm not licensed to advise anyone on this.
Yeah.
But bear in mind, investing is a lot of work. Investing is a lot of research. Investing is a lot of careful assessment of data and stuff like that. Anyway,
yeah.
So and because I speak to a lot of people, and everybody says, okay, I'm going to invest in the next Facebook. I'm going to invest in the next Instagram, and this company I'm investing in will be the next Amazon. Well, everybody knows by now how many Amazons there are. There's only one.
Yeah.
How many Shoppees there are? There's only one. Well, okay, Shopee and Lazada may be in the same category, but I see more interesting stuff now coming in this part of the world. Back then, it was mostly North America, Europe, but now there's things happening in Indonesia, things happening in Malaysia, things happening in Singapore. So yeah, right time to be.
Would you like to share some investment opportunity that you said no to and you regret it to this day?
Yeah.
Take some time. And then,
Yeah. I haven't said this publicly, so this is the first time I'm saying it publicly, but a long time ago, in 2007, I was doing some work in the international arena, and a bunch of guys approached a couple of friends and and they said that they wanted to start something up. And then we said, what is it? And then they said, oh, we're looking for angel investors. we're offering 2 from Asia Pacific, 2 from North America, 2 from Europe. So we wanted to get a pool of investors coming in. And so I said, what does this thing do? I said, well, like it's a messaging platform. And back then, 2007, you're thinking about blogs just starting. Websites were still the thing and blogs were just beginning to happen. So these guys were saying, oh, well, it's like a platform, or it's something that allows you to tell your friends what you're doing without having to send. It's like SMS, but you don't have to send 10 SMSs to tell 10 of your friends what you're doing. You just send one and everybody gets to see it. So I actually said, okay, what's the business model? And they said, we haven't figured it out. So I said, how do you make money? What's the monetization model? And they said, we haven't figured it out. So I said, which twit is going to put money in that kind of thing? I mean, you cannot, you don't know where you're going to get money from. You don't know what your business model is. You don't know how you're going to monetize this. So who would invest? They said, we don't know, but we hope you might. And I actually said, thanks, but no thanks. I passed on. I think there were 5 or 6 of us who offered. I think one of them did go in. 2 of them went in, I think. And that company is called Twitter. Yeah. So, yeah. So who was the twit, right?
Yeah. Yeah. Yeah.
No, but Kelly, but look, in 2006, everybody was SMSing. Everybody was just starting websites. Everybody just started blogging. MySpace was the top thing, not even Facebook. That's 2006, 2007, right? So when SMS was working fine, who would have thought, why would you need Twitter? Right. In fact, when WhatsApp came, if you think about it, and to all the investors out there, when WhatsApp came, would anybody want to invest in WhatsApp? Because you already have SMS.
It was BBM back then. I remember BBM was a big thing, right?
Yeah, but you see, this is the thing about technology, right? I was in the space, and yet I missed it.
Because you really never know. You really never know what's going to kick off.
Yeah, like Twitter, for example, if you read the history of Twitter, how it really kicked out, it struggled for 3-4 years. And they were almost going, and most startups actually struggle before they bounce up. And in the case of Twitter, they were literally running out of money. The only thing that helped change the fortunes of Twitter, I think one of the things that helped change their fortunes was when Demi Moore, one of the actresses who was going out with Ashton Kutcher, they were on, well, one was in the UK or somewhere opposite sides of the Atlantic, and they were tweeting to one another while watching the same movie. So one had 4,000 followers here, one had 7,000 followers here. So they kept just tweeting back and forth to one another. And these were retweeted and retweeted and retweeted, and suddenly it caught up. But if that wasn't the case, I don't know, maybe Twitter might not be here. And look, if you speak to the Silicon Valley venture capitalists, you will know that many companies have come out with such ideas and they failed. So sometimes it's also being at the right place at the right time for those companies, and as well as the investors. Yeah. So
with the story of Twitter, does it mean that monetization doesn't really matter at the first 3 years of their company? Because they didn't have a business model, they were not charging money. Like Facebook at the start, there was no monetization way. It's just, oh, let's just try this out. And oh, it kicked off. Oh, it made money.
Yeah. I mean, here's the problem, which is the issue at hand. Companies need money to sustain themselves. So as an investor, I will always ask, look, you want my money. I'm going to ask you how you're going to use my money. How you're going to apply my money. And if you say, look, I have no idea, Sharil, how I'm going to make money for you, then why would I want to put money in you? But in the US, especially at that time, there was a willingness to gamble. There was a willingness to try something new. And that's why they're more advanced than we are. Here, for example, a lot of the startups face a lot of these kind of issues because, now I think investors are more savvy. There's also more companies and there's more opportunities available. So today, if a startup came to a VC or came to investors and said, look, I really have no clue how I want to make money, I don't think they're going to get anywhere. But if they said, look, I'll tell you that I will not make money in the first 12 months, but I can monetize by month 13, by month 14, then you should give them a, you should consider. But one of the things you should look at is whether they have enough cash to extend the runway. So maybe we should start taking some questions.
Yeah, I was just thinking the same. So I'll take one question. What is your advice on investment philosophy based on trends?
Wow, what is what?
What is your advice on investing based on trends? So let's say, for example, crypto is a big thing, or platform back then, when Lazada, Zalora was ongoing, everyone was injecting fund into platforms. What are your advice?
I think one of the things that you should, again, investing on trends is always exciting, but at the same time, it's always scary, because some trends might pick up and some trends might not. Now, people would argue that today the trend is crypto platforms, things related to
Video, TikToks,
yeah, video and all that. But careful that you distinguish a trend to a fad. A trend must actually have slightly more longevity. A fad is the one that you don't want to get in, because if the startup doesn't move fast enough and doesn't catch the wave of the fad, then by the time it catches up, it dies. So I would rather invest based on themes rather than trends, because within the theme you will see a trend. So for example, healthcare is one of the things I look at, simply because for so long as you have human beings, you will need healthcare, right? Fintech is what I would also look at, because for so long as you have to use money and invest, or do something with money, then it will always be there. But within each vertical, that's when you pick up the trend. So I would always take it, if you see one theme that you like and you're passionate about, follow that theme, follow that trend, and then pick up from and improve your knowledge. And then and sometimes in business school, what people do is people try and say, okay, why don't you go and pick 2 or 3 winners, and you start tracking them, and then you see whether whether your bets or your hunches become real or not. Oh wow, look at this question. There was so government policy. Shall I?
Yes. Yeah. So this is from Ken Tan, right? Is it the first question?
Yeah. So
right.
Ken Tan, you want to read the question?
Yeah. So Ken Tan is asking, right? Mr. Sharil, you have extensive experience in public sector. What do you think government should do to promote more investment from investor in Malaysia, especially angel and high net worth investor? Are the currently policies enough? What more do you think the government should do?
Actually, I must say that MBAN has done a lot for the angel investing community, and people, the founders of pitchIN, for example, were friends of mine, and also various other founders of various other platforms, also friends of mine. They've all done a lot to try and create a more a more conducive ecosystem for investors. I think it's not about the policies, it's about the we as investors, are we comfortable with the asset class that we're looking to invest in? Now, I'm just going to switch hats a little bit, because in Malaysia, people are very happy with the fact that they can put money in unit trusts, they can put money in certain types of structured funds, they can put money in FD. We've always enjoyed an FD rate of 3-4% before. So if you're happy with that kind of returns on your investment, and it's safe and it's capital protected or capital guaranteed, you don't look elsewhere. Why was this happening more in other places? Is because they actually charge you money to put money in your bank. There's negative interest rate. So people look for different classes of assets to invest in. So the short answer to it, I think the government's done quite a lot. It's just now up to us. I mean, how much more incentives do you want? You have to if you want to, you take the plunge. and you use the benefits that the government has provided in terms of the tax breaks for those who qualify to be high net worth investors, all the other breaks that they have, take advantage of it. But it doesn't remove the responsibility that you have on yourself to do the research to determine what kind of things you want to invest in. You know, it's entirely up to you as an individual. Now, national agenda. I know Razman as a right. I know Razman asked the question. As an investor, what is your appetite on new business innovation, especially focusing on national agenda? As an issuer, I found out that Malaysia investors prefer to invest something proven rather than taking a risk. As I was told, for new innovation, there's more failures and success in new business innovations. You're absolutely right. I mean, Malaysians are fairly risk averse. As I said, I've not made any money yet from any of the investments, but I've been fortunate that I haven't lost anything yet. Oh no, actually no, I have lost one in one investment. I was in some sort of media venture and it blew up. Yeah, but the point of the matter is, risk appetite is not on the government, it's not on the country, it's not on anyone, but it's on you. You have to determine for yourself, what is it that you think? And you know what? When I started 25 years ago, you couldn't invest 500 ringgit. You couldn't invest 1,000 ringgit. If you wanted to invest 500 ringgit or 1,000 ringgit, maybe you go to the stock market, you buy one share, 2 shares. So you couldn't be part of the ecosystem. As I shared just now, my first investment was in the tens of thousands because that was the only way you could invest. The good thing now, with everything that the government has done, apart from pitchIN, there's 6 or 7, Kelly, equity crowdfunding platforms that you could go to.
Yeah.
And you could look at the different investment offerings and then make an assessment, try it out. I mean, don't try and invest unless you're prepared to put the money down, but try it out as in like, okay, follow the companies, learn. pitchIN actually has a very good structured information place, which you can even look at now without having to log on or join pitchIN. Again, I'm not doing a plug for pitchIN, but have a look, and then you can see the kind of corporate information they put out. What is the problem you're solving? What is it that the companies are doing? Are you even interested in the area for investment? And if you are, you know what? Go and register, and then you can get more information like the actual pitch deck. You can actually get the financials. You can get the company's documents, and then you get a sense.
Yeah.
And then you decide, right?
Yeah.
Investment support system is comparable. What is missing?
So let me read this question out loud. Yeah. So one of the question is, do you think our investment support system is comparable to countries like Singapore and Indonesia? And what is missing from our local ecosystem?
That's a hard question, whoever anonymous is, but that's a very hard question. I think we have a decent support system. I think between Singapore, Indonesia, and Malaysia, we have a decent support system. But I also think that one of the things that we probably could do more to improve, and I think they've just started working on it, is we have a gap between what I call the early stage investment, the pre-seed, seed and pre-seed series up to a series A. So a lot of companies actually fail at that size, where they come in and they have an idea, they have a product, they run out of steam within the first 12 to 16 months or the first 18 months. So that's where we have a bit of a gap, I think. But what I think the government and MBAN and everybody else who's been lobbying for that, you've now got Penjana Capital, you've got now a few other of these venture funds, you've got angel clubs who are now coming in. Even I think, I won't name them on this one because competing platforms, but there are now many who are coming in at that sort of seed, pre-seed, after the family and friends level. So that's what you need to prop this up. The big money, actually, we have, we have the likes of Cradle, we have the likes of other government type funds, various VCs that we have. both government owned or private owned, or those which actually have a matching fund. So we have that. So what's missing? I'll tell you what's missing. Our startup founders, it's not easy being a startup. It's not easy being a founder. It's not easy being a co-founder. It's really, really, really tough. What's missing for our local system, ecosystem, I think, is the thinking about going regional. Let me tell you why. A startup in Singapore, they know that the Singapore market is way too small. So the first thing the guy does is that, look, I'm going to start in Singapore, but next month I'm going to be in Kuala Lumpur. The 6 months after that, I'm going to be in Bangkok, and 12 months after that, I'm going to be in Indonesia. The Indonesian startup doesn't have to think that way because he's got like 350 million people in Indonesia to work on.
Yeah.
The Malaysian startup is caught in between. They're like, oh yeah, I'm big enough. I'm about 35, 40 million people in Malaysia. But then they got stuck. So many times I asked them, I said, look, one of the things that investors would look at, again, or VCs would look at, and you have to know that journey, right? You have to start from the seed, pre-seed, seed, Series A, Series B, Series C. By that time you want to hit that, they'll be asking you, what's your regional strategy? And what's missing is actually our entrepreneurs, our startup founders don't very often think far enough when they're starting. Nobody expects you to get it right, but you got to start thinking about it. Are there any investor icons?
So I have a question. What do you feel about companies, especially startups in the local scene of Malaysia, that copies business model from different region? Would you consider investing in them?
Nothing wrong with that. Actually, I would, and there's a few that have done that. But I think what I would do is I would look at those what I call copycat type companies and see whether they're applying what they're applying would actually be relevant to the region. Because sometimes what you get is you get a company, you get a copycat that has copied a model of Europe or the US, and then you find that actually there's no market fit. And that's where you run the risk. But if you are at the right time, where say the US company wants to then come into the Asian region and you create a foothold strong enough for you to be an acquisition target, like I said, there's nothing wrong with that. Perfect strategy. So I would, provided they're in the same vertical, because then what I would do as part of my research as an investor is look at what the US or European company is doing, and then see how it can help to make them an acquisition target.
Yeah. Because I noticed, I think early 2015, 2016, there was a lot of copycat startup that was waiting to be acquired, like Zalora, not to say copycat, but the business model is fundamentally the same, right? Like they copied ASOS, and then there's Lazada that wants to be Amazon. Would you say that these copycat startup are something that you would advise the audience to invest? Because it works, right? It works. It's fundamentally the same thing. It works in Europe, and the chances of them being acquired is so much higher.
No, well, again, investing is actually a lot of work. You can't sort of put your money down unless you've got professional investment managers. All right, maybe this is the other thing I should say. If you don't have time, there are now many of these little funds which are setting up, scale-up funds, startup funds, which are run by professional managers. You could invest that way. So there's several ways of investing, right? One is do it yourself directly through a licensed equity crowdfunding platform like pitchIN. I must say licensed, otherwise my friends at the SC will come after me. Two, go and work with licensed investment managers and you put money there. And then three, of course, if you've got more money, then you work with you put money into funds like venture capital funds. Basically these three. The thing is, if you put directly in the company, if you don't have time or experience or knowledge, or the founder is not willing to work with you, then your money really is at risk entirely with the founder. At least if you put it in the second category, which is the professional fund, accelerator or fund manager, they know something about the company. They know something about the industry. They've got the network to bring the startups to the next level. So you know that you're de-risking, if they call it.
Mm.
Of course, the higher one is all the VCs and the PEs, because they have a closer reach to an exit, like
Right.
a listing. Like a friend of mine runs a very, very big fund, Creador, right? Creador, as a private equity fund, does not invest in startups. They only go for near to late stage, those pre-IPO, and they've done very well. They've done Mr. DIY, they've done now CTOS. I think they've got another one coming, which I cannot talk about. But yeah, you just watch that space. So number one, identify what is your risk appetite. Look at the sector that you think you want to follow, and then make an assessment as to how much you are prepared to put at risk, not to lose, but put at risk.
So how much would you say what is the rate of return that you would consider as a good investment?
Not to lose money.
Not to lose money.
No, well, no. I mean, seriously, what will be a good rate of return? Anything than FD is better. But seriously speaking, if you're looking at it in the financial markets and sectors, people typically look at a 25-30% return if they can. I know some are more aggressive, some go into multiples, some say, oh, I want a 1x return, 2x return, 3x return. But the question is, over what period of time?
Right.
So that when you decide as an investor whether you're the type who wants to roll, it's the same thing the VCs do, right? Whether you want to roll for a distance or you want to cash out the first opportunity. So I'll give you an example, right? Some of the people that I know, funds, they come in and they decide that they will not allow themselves to go into a Series B, because companies can still fail at Series B to C. So what they do is they exit at Series. They come in at seed or pre-seed. By the time A comes and A is going to B, they exit. Another type of investor picks up VC funds or something. And for that kind of thing, maybe you make 2x, maybe you make 3x. Because don't forget, as every stage in the fundraising process that the company goes through, there's dilution that happens all the time, right? So you have to assess for yourself as an investor, what is your risk appetite? What is the sector you want to look into? And in terms of proportion of how much, I would suggest that you put aside an amount of money that you are prepared to put at risk. I don't know how much that is. It will depend on every individual.
Yeah.
And then from that pool of money, decide which one you want to have, say, for long term and which one for maybe shorter term.
Okay, so are there any startups or company out there that you like and wish that you have invested in, and why?
Yeah, Custom is one of them.
Oh, okay, Carson.
I met Eric Cheng a long time ago, and I was like,
why didn't you invest?
I wasn't. I didn't do my research well enough, and I didn't. I was not prepared. I didn't quite understand the second-hand car market, the car buying market. I'm very much into cars, but I didn't quite understand how the ecosystem worked. So when the opportunity came, you only have short windows. So there wasn't enough time for me to learn and read and then be comfortable with what was on offer. And I said, it's okay. But yeah, but bear in mind, these are very early stage. I'll tell you another story. I met My Taxi.
Yeah, I know.
Now everyone, I met in the very, very early days. And I met the guy who was doing better than My Taxi, called Taxi Monger. Way back, right? And at the time, Taxi Monger looked more real than My Taxi. Because Taxi Monger had the ecosystem covered. My Taxi was copying Uber's model. But look, Taxi Mongers no more. My Taxi has become Grab, and it's a decacorn.
Yes.
So, you see two companies. I saw both companies. I wasn't sure which one. I didn't back either one, but, it happens.
So, speaking of investment that you missed, would you mind sharing investment that you were like, wow, I'm so glad I didn't invest? I'm sure there's plenty of them that came to you that you were like, okay, I'm tempted, but I didn't. Can you share some of them?
Well, nothing comes to mind immediately. I mean, I don't know what. There's quite a few that I guess I would say that I was glad. One of the things that I worry about now are the fad type things. The fads as opposed to the trends, right?
Yeah.
So, well, no, they're not dead yet, so maybe I shouldn't say anything.
Okay, let's not. All right, so coming back to investing, what are your thoughts and take on impact investing? Companies whose objective is to impact society, but may not be to reward investor as fast as they wish.
I do. As I said, in the pool of funds that I set aside to invest, I actually look at the various. Okay, I'm a commercial kind of guy, so I still try to look at. You see, impact investing and social investing. To me, I will always look for also the economic side of it, because I believe that if you're creating enough of an impact, there'll be somebody who's willing to back it up and fund it. Now your returns may not be there, but look, at the end of the day, we all also invest for different reasons. Some invest for money, some invest for knowledge, some invest for
passion, like you.
Passion and what makes you feel good.
Yeah.
But I always also suggest to people, again, different people are motivated differently. I also do some of the impact investing because why? It doesn't put money in my pocket, but it makes me feel good. And I think that's important for mental health as well. If you think you're doing something good for the community, I always believe that if you're doing something good for the community, something good will come back. Oh, somebody asked me about InsurTech and health tech in ASEAN.
Yeah, I was going to go to that question as our last question of the day because our time is running up. So what is your view on the prospect of telehealth and InsurTech in Malaysia and ASEAN?
Huge. And I think, one of the things, you see, and this is a very personal view. I was just looking, I was just actually looking one before I answered that, Kelly. Some guy is actually saying, I missed on Twitter, I missed on Kasam, I missed on my taxi. I need to
yeah.
Actually, why don't we get him to speak next time? Because I missed out on all of those things. But it goes to show, like, nobody's perfect, right? Anyway, coming back to InsurTech and health tech, I think that's very, very big. But the awareness is not yet here. So, for example, yes, somebody mentioned I'm an early investor in BookDog. We're still there, we're still running. Some interesting things are going to be coming out from BookDog soon, hopefully.
Is there anything you can share?
No, sorry.
Okay.
But watch the space.
Okay. Sure.
But I think one of the things that the prospects, health tech, telehealth, InsurTech in ASEAN, in Malaysia, in this region, Asia Pacific, I think is huge. Because why? Compare that with other parts of the world, compare that with the US, compare that with more developed countries like Japan, compare that with Europe. We are still very low in terms of provisioning for those things. So there's huge opportunities. Having said that, the big boys from overseas are also coming in. So one of the things that I always look at to see who's going on a regional expansion, who's coming here. And if there are any startups who are actually in that space, they might be a ready acquisition target. Maybe they're worth backing. So notable companies to watch out. Actually, there's many now. I think there's about 10 in health tech and InsurTech, at least worth watching. I follow some of the local publications or local, blogs and journals to see who's saying what or doing what. Health alone, I think there's about 7. 7 or 8 companies. Singapore, a Singapore company, a Thai company, Malaysian BookDog. Then there's 3 smaller ones in Malaysia. Health metrics, this and that. They're all there. So I try and watch each and every one and see, because they all tend to do similar things, but hopefully they'll all do well at some point. Because for me, although I may be an investor in BookDog, I'd like to see the others do well as well.
Yeah. Okay. So one last question. I know a lot of people in the audience here are also startup founders and entrepreneurs. So Dato, if you were to start a startup right now, what problem would you solve? It's a business idea right there. I'm sure everybody wants to know, what would you invest in and what gaps do you see?
if I was to start up a startup now, I would invest in a startup that's trying to understand how people behave.
Oh,
Yeah.
consumer behavior, or just in general, any behavior?
Behavioral as well, consumer patterns, trends, because a lot of what I see that's happening is, back to the question earlier that somebody asked about the trends and the fads. People are catching on these things. I mean, look, up till a year and a half ago, nobody had heard about Clubhouse. Suddenly Clubhouse became very big. Ironically, 10 years ago, you hardly heard about Facebook. What's ironic is that now you speak to people who are my children's age, they say that Facebook is for your generation, not mine. So,
ouch.
Ouch. Bad for my ego. But the issue is, if I had somebody, if there was a startup founder who said, look, I've got a crystal ball that can tell you what the trend of the future might be, and then I can test that hypothesis, that's the guy I'm going to back. I don't know what that might be. I have no idea, but that's the thinking. That's one question that I thought would be useful to respond to. Rise in specs. I think there was one guy.
Which one?
There's this guy, Jake. Would a rise in specs encourage or hinder the risk appetites of angels or investing community? I think one of the things that we have to appreciate, again, thank you, the anonymous guy, for being supportive, appreciate it. Jake, the issue on specs, again, spec is now becoming a popular exit opportunity for startups. But specs in itself, it's a special purpose acquisition vehicle. It is really just a shell of a listed co, which then acquires a qualifying asset. So your question of whether it hinders or risk appetites of angels, no, I think it just creates another opportunity for exit for investors, another opportunity for exit for founders. Because again, if you follow the journey, right, you first take money from friends and family as a startup. After taking money from friends and family, you then go and extend the friends and family to maybe angel investors. And then after angel investors, you try and get a VC to back you up. And then after VC, you try and get a PE to back you up, a private equity. And a private equity is usually the guy who's going to push you to get either to an open market, like a listing, or a SPAC. So that's the journey. Question is, where do you want to be on that journey? Typically for angel investors like us, we're probably at the early stages, because unless you've got like a couple of million to throw in, then you're not an angel investor, you're probably a VC. So as I said, I'm in the very early stage. Some of them are actually at this early stage, but the journey is always the same. The exit is either a trade sale, someone buys out the startup that you just funded, or a listing, or because then when the shares become marketable, they become valuable, and therefore you then get to cash out.
All right, I think it's time to wrap up. We're slightly behind. We're slightly behind our schedule. Dato, do you have any last words of advice for our audience today?
Yeah, I'm gonna take the words of the anonymous guy here. He's actually given good advice. I'm gonna take his advice. I agree with him. He said that investing is a marathon. That's very, very true. It's not a sprint. Do not expect to go in and invest and expect to make your money in 2 years or 3 years or 4 years. Because the reality is businesses do take time to grow. Businesses do take time to mature. What's important is that when you're investing for the right reasons. You're investing because you have an interest in the company and what they're doing. You agree with the outcome that the founders have told you about, and therefore you're willing to go with the journey. And hopefully along the journey, as all of you can then make something out of it, either impact investing, as they say, make an impact, or make some money. But it is never a sprint. I said I've been doing it for 7 years. I haven't seen one dime yet. I wish I can say yes, I've exited from 3-4 companies and made 5, 6x, 7x. No, haven't exited yet. But what I can say is that the companies I've been working with for the last 6-7 years, many of them have gone up in valuation. So they've done a 2x, 3x, 4x kind of value growth, but no one has exited yet so far. Well,
but they're still alive. But they're still alive.
and they're still alive.
That is the key point from here.
They have survived the pandemic. Many didn't. I must say, many didn't. These guys have survived the pandemic. So kudos to the founders. But as I tell them, I said, look, 2022 is even going to be harder. If you survive 2021, great. You survive 2020, great. But 2022, we all have to, make something work.
Yeah. All right. Thank you so much, Dato. Thank you so much for spending your time to share with us. And, we'll see you soon. Thank you. Bye-bye.
Thank you for the questions, and thank you for having me. Take care.
Bye-bye.